Today's mindful moment. What if somebody told you that a mountain of gold wouldn't actually make a country rich?
Hmm.
It kind of doesn't make sense.
Right.
But that's one of the really cool things we'll be talking about today as we look into the history of money.
Yeah, it's a really common misunderstanding that to be rich, you just got to have like tons of gold and silver and all that. But history shows us it's way more interesting than that.
So we're going to be checking out this book called The Ascent of Money by Niall Ferguson. By the way, there's a link in the show notes if you want to buy it yourself. This book takes us from like way back in ancient Mesopotamia all the way to like Wall Street today, showing how money and civilization have kind of grown up together, shaping, huge empires, all sorts of new ideas and causing good things and like utter chaos along the way.
It's a story that really makes you think differently about money, value, and like all the things that change how our economy works.
Okay, so let's go way back in time to ancient Mesopotamia. This is like where civilization as we know it kind of got started. And here's the really cool part. Some of the very first things people wrote down weren't poems or big ideas or stuff like that. They were actually clay tablets that had every little business deal written down super carefully.
Yeah, these clay tablets are super old, thousands of years. And they let us see this world where money was already doing big things, helping people trade and keep the economy going. Like we see them writing down loans, paying back debts, even interest rates. And get this, sometimes those rates were like 20%.
Whoa, 20%. Those ancient Babylonian lenders, they knew how to make a profit. But the really crazy thing is, these tablets show us how important trust is when it comes to money.
Oh, yeah, for sure. It's not about like the thing itself, like whether it's a clay token or a gold coin. What matters is that everyone agrees it's worth something. That trust, that everyone believes in the system, that's what lets you make like more complicated money stuff.
Okay, so let's jump ahead, like a few thousand years to when the Spanish were conquering the Inca Empire. We all know the conquistadors were obsessed with gold, right? They stole tons of it from the Incas. So you'd think that'd make Spain, like, super rich, right?
Right. It makes sense to think that. But actually, it's not that simple.
Hmm.
By flooding their country with so much gold and silver from the Incas, the Spanish accidentally caused this thing that still affects us today, inflation.
So instead of making Spain richer, all that gold actually ended up making their money worth less.
Exactly. Prices went up, the stuff you could buy with that gold and silver went down. Spain learned the hard way that just having more money doesn't always mean you're richer. It goes back to that idea of trust. Everyone has to believe in what money represents.
Yeah, it's really interesting how, as societies become more advanced, the way they use money changes too. Like those Italian merchants back in the Middle Ages. They had a huge impact on developing banks and credit, the stuff that modern finance is built on.
Mm.
I think it's so cool how these financial tools kind of reflect how society's changing. Like, think about the Medici family. They started as this let's just say tough group of businessmen. And then they ended up being these big-time bankers who funded everything from art to wars.
Yeah, their story really shows you how powerful money can be. They got that if you're smart with money, you can use it to get a lot more than just being rich. It's also about influence and power.
But their story also shows us how risky the money system can be. You can see it with bank runs, which can still be a big problem even today.
Okay, imagine this. You have a classroom, right? Just a few kids. One kid gives their money to another kid. Then that second kid lends the money to a third kid. This shows like the basic idea of credit making what we call money inside their little classroom system.
Okay, yeah, I get it.
So now imagine the first kid, the one who gave the money, suddenly wants their money back right now. It sets off this whole chain reaction. The kid who borrowed the money maybe doesn't have it ready to give back. And then everyone starts panicking.
Like a bunch of financial dominoes. One falls, and then they all go down.
Exactly. That's a simple way to show how fragile banks can be when they don't keep all the money people give them. If everyone wants their money back at the same time, even a good bank can go under.
Makes you appreciate the things we have now to keep banks safe, like deposit insurance and all those rules. Back then, it was like the Wild West of finance.
Yeah, for sure. As these money systems got fancier, they came up with new ways to deal with risks and make the economy run smoothly. One of the biggest changes was the bond market.
Okay, so how did the bond market become so important for funding things like wars and big projects?
Think of it this way. Cities and countries need a ton of money to build stuff like roads and bridges, or even to fight wars. By selling bonds, they could get money from regular people, like a giant group project. you know?
It's pretty amazing how the bond market let governments get way more money than they could just by taxing people.
Yeah, and for regular people, buying bonds was a chance to help their cities and countries grow, and they made some money from it too.
So it's like they helped each other out. We see this happening with the Rothschild family. They built a huge financial empire by being really good at the bond market and funding wars all over Europe.
The Rothschilds, they were clever. They used information and connections to get super rich and powerful. Governments would go to them first when they needed loans for their big plans.
Sounds kind of like too big to fail, you know? Like, if they went down, whole countries would be in trouble.
Yeah, you've got a point. When you're doing business on that scale, it makes people wonder if too much power is concentrated in just a few hands. But it also shows how important they were for getting money to flow between countries.
And that flow of money, history tells us, it hasn't always been smooth sailing. We've had everything from the South Sea bubble to the dot-com crash. Money history is full of times when people got way too excited and everything came crashing down.
Oh, yeah, the ups and downs. It's like humans just love to get caught up in these crazy money rushes. We always think, this time it's different and we're going to get rich quick.
And sometimes those crazy rushes are about ideas that seem new and exciting, like those cotton-backed bonds the Confederacy tried to use during the Civil War.
Those bonds were interesting. They were trying to use the South's biggest export, cotton, as collateral. And at first they were actually doing pretty well because everyone needed cotton during the war.
So what happened?
Well, the problem was that for those bonds to really work, investors needed to actually get their hands on that cotton. When the Union took over New Orleans, a super important port for shipping cotton, getting access to the cotton that backed those bonds became almost impossible.
So it's like they bet on the wrong horse, right?
Kind of, yeah. It shows you how important collateral is and how risky it is to link money stuff to the outcome of a war.
Makes you wonder if there are like hidden patterns in these historical events, like things we could learn from to understand and maybe even navigate the crazy world of money today. You know, I've heard about YouTube channels like Mindful Moments that use AI to analyze audiobooks about finance, looking for these very patterns.
It's pretty cool how much we want to find some order in the messy world of money, huh? Maybe by combining these new tech tools with what we know from the past, we can actually learn something useful and make smarter decisions.
Hopefully decisions that help us avoid making the same mistakes all over again. But before we get ahead of ourselves, let's jump into another crazy chapter in the history of money. The story of insurance.
Ah, yes. The art of trying to control risk. It's a story of creativity and adapting, from humble beginnings to being absolutely essential in the world today.
And as we'll see, this story takes us right to one of the worst natural disasters in American history, Hurricane Katrina.
Katrina really showed us how powerful nature can be. Like, it can just totally mess up all the systems we've built.
It's like nature just threw this huge wrench into the whole insurance system.
Yeah.
And we saw it, especially in New Orleans. The insurance companies had to deal with so many claims. It was crazy.
Yeah, the sheer amount of damage from Katrina really exposed like the limits of insurance. It's meant to handle risks that you can kind of predict, you know?
Like house fires or car accidents.
Right, exactly. But Katrina was just so much bigger than that.
It's like trying to get insurance for if a meteor hits your house. The chances are so tiny, it's basically impossible to figure out how much to charge for that risk.
Yeah, exactly. And with Katrina, we saw how all that fine print in insurance policies became a huge problem, especially the part about wind damage versus flood damage.
It's like this crazy battle straight out of Shakespeare.
Yeah.
You know, the people who need insurance and the insurance companies are both trying to use the rules to their advantage.
Yeah, and then this larger-than-life lawyer, Richard Scruggs, comes in. He was fighting for the people in New Orleans who felt like the insurance companies were ripping them off.
Scruggs became like a hero,
Yeah.
you know, fighting for the little guy against these big corporations, especially the ones making tons of money while the people they insured were loaning with nothing.
It's a classic David and Goliath story, but like with most things, it's not so in black and white. Scruggs was helping his clients, but then he got in trouble with the law himself.
Yeah, it shows that even with insurance, where the idea is to protect people and help them when things go wrong, even the best intentions can go sideways because people make mistakes and the legal system is so complicated.
Absolutely. And it reminds us that insurance, even though it's super important, it's not perfect. It's always changing, trying to keep up with new problems and find a good balance between risk and reward.
And, you know, the way insurance has changed, it's all tied to how we understand risk and probability. It's like those early guys figuring out how insurance works. They were trying to solve the mystery of the unknown, you know, find patterns in things that seem totally random.
Think about Jacob Bernoulli. He said that we can use what happened in the past to figure out what might happen in the future. That's the basis for the law of large numbers.
It's like flipping a coin 1,000 times. You can't predict every single flip, but you can be pretty sure that heads and tails will come up about the same amount of times.
Exactly. And that idea, when you apply it to things like how long people live or how often accidents happen, it let them figure out how much to charge for insurance in a way that actually made sense based on the risk.
It's amazing that math stuff from hundreds of years ago is still what runs the insurance industry today.
And as we got better at understanding, risk insurance changed too. It's not just about protecting your ship or your house anymore. It's about protecting whole systems like welfare programs,
Yeah.
safety nets for people when life throws a curveball.
Yeah, we see that with how welfare programs grew, especially places like Japan. They started covering healthcare, unemployment, all sorts of stuff.
Japan's interesting. Their welfare system was basically a response to war. They needed to make sure their people were healthy and productive so they could help the country's military and economy.
It's like the government was saying, we'll take care of you so you can take care of the country.
Exactly. It was a two-way street, and it led to way more social programs so people had a level of security they never had before.
But expanding welfare like that comes with its own set of problems.
Yeah.
Costs go up, populations get older, the way we work changes. It all puts pressure on these systems.
It's something a lot of developed countries are dealing with. How do you make sure people are taken care of without hurting economic growth? It's a tough balancing act.
Yeah, it shows that even the best systems have to change as the world changes. But let's switch gears for a minute and talk about another big development, the rise of corporations.
Corporations are pretty ingenious when you think about it. They let people pool their money and take on these huge long-term projects.
It's like finance as a team sport, investors working together to achieve things they could never do alone.
And a big part of that was the joint stock limited liability corporation. That structure totally changed the game for businesses.
Oh yeah, limited liability was huge. It meant investors wouldn't lose everything if the business went under. They'd only lose what they put in, which meant people were more willing to take risks and try new things.
Exactly. It was a crucial step that allowed for big, complicated companies that could do things like trade across the ocean or build railroads.
And talking about ambitious projects,
Yeah.
we can't forget the Dutch East India Company, one of the first truly global corporations.
The VOC, as it was known, was a total powerhouse in terms of business and money. They were all over the world, real pioneers. They even had to deal with corporate governance issues, stuff we still worry about today.
It's fascinating how they tried to balance the needs of shareholders and directors, making sure things were accountable and transparent. Those are themes that keep popping up throughout corporate history.
Yeah, those themes, managing risk, figuring out where to invest money, making sure everyone's behaving ethically, they're just as important now as they were back then.
It shows us that history isn't just a bunch of old stories. It's full of lessons we can use to navigate the crazy world of modern finance.
And like we've seen, those lessons often make us rethink what we thought we knew about wealth risk, even what money really is.
Corporations, for all the good they can do, can also go overboard, especially when people get caught up in speculation.
Yeah, it's like that old Monopoly game, but in real life, 1 minute you're buying up property and building hotels, and the next you're totally broke.
And it's interesting how owning a home became such a big part of what it means to be American, tied to the idea of democracy itself.
This idea of a property-owning democracy where everyone owns a piece of the system, it's shaped government policies for, forever.
Yeah, from the New Deal all the way to those government programs like Fannie Mae and Freddie Mac.
Those were made to help more people achieve the American dream of owning a home. By making it easier to get mortgages, they helped to create this huge boon in people buying houses.
And for a while, it seemed like it was working. Home values went up, people felt good about the economy, and everything just kept growing. But then we had that subprime mortgage crisis back in 2007, 2008. And it showed us that even when you're trying to do good things, you can accidentally cause big problems.
It's like building a house on sand. It might look solid at first, but eventually those cracks are going to start showing.
And with the subprime crisis, those cracks were hidden in all those super complicated financial things like mortgage-backed securities.
Right, those were basically bundles of mortgages all packaged together and sold to investors.
So it's like those Wall Street guys created this magic potion that made risky mortgages look like safe investments.
Yeah, a lot of people got blinded by the promise of big profits. They didn't see the danger lurking underneath. And when those mortgage-backed securities started to fail, it set off this chain reaction that messed up the entire financial system worldwide.
The subprime crisis really showed us that just because something's complicated doesn't mean it's stable, and it made it super clear how connected the whole world is.
Yeah.
Someone can't pay their mortgage in California, and it can cause panic in London or Tokyo.
Definitely, it showed how important it is to be transparent, have good regulations, and really understand risk, especially when people are inventing new financial stuff faster than we can understand it.
Yeah, history's got a lot of warnings for us. But in all those stories of greed and collapse, there are also these amazing examples of people bouncing back and being creative, like with the whole microfinance thing.
Oh, yeah. Microfinance was about giving people in poverty a chance to succeed. They could get small loans, often to women starting their own businesses.
It just shows how powerful money can be when it's used to create good things in the world.
The Grameen Bank in Bangladesh is a great example. They helped so many people escape poverty by giving them the money they needed to become entrepreneurs.
It's like planting a tiny seed and watching it grow into something huge with a little bit of money and a lot of hard work. Those small loans created this ripple effect of people becoming financially independent.
It reminds us that the history of money isn't just about Wall Street tycoons and empires collapsing. It's about regular people using money to make their lives better.
So, as we wrap up our deep dive into the ascent of money, what are some key things our listeners should remember?
Well, first, always keep in mind that money is basically something we made up. It relies on everyone agreeing it's valuable. Second, understand that financial systems, even though they're important for growth and progress, are always going to be complicated and go through good times and bad times. And finally, remember that the history of money is full of stories about new ideas, resilience, and how humans can be both brilliant and really foolish.
If you found this stuff interesting, we definitely recommend checking out The Ascent of Money by Niall Ferguson. There's a link to buy the book in our show notes. And of course, don't forget to subscribe to The Deep Dive for more deep dives into all sorts of complex and fascinating topics. Understanding the past is the key to figuring out the future. So keep asking questions, keep learning, and stay engaged.